Trading the Forex market often feels like navigating a chaotic river current. You are constantly managing the pull of unpredictable price swings. To stay on the right side of that flow, we need a way to measure exactly where the market's energy is shifting. That is the function of Bill Williams' Awesome Oscillator. It's an instrument designed to visualize hidden market momentum. Open your charting software and a demo account. We're going to use this tool to map out 3 specific high-probability setups. Translating complex price action into a visual histogram moves you away from guessing and toward executing based on tangible evidence. First, configure your chart timeframe. Set it to the 4-hour or daily view. Lower timeframes can be dangerous for this indicator. On a 15-minute chart, momentum signals often flip-flop erratically, creating too much noise to be actionable. Higher timeframes serve as a filter. They smooth out the data to reveal the actual direction of the underlying trend. Go to your Indicators menu and add the Awesome Oscillator. We'll also add the Relative Strength Index, or RSI, for later confirmation. Unlike many indicators that use closing prices, the AO calculates the median price of each candle. This midpoint calculation ignores much of the intraday noise. Filtering out that noise is a necessary step before you can accurately identify where market energy is headed. Our first setup is the zero-line crossover. This is often the first sign that a brand new trend is beginning to form. A bullish crossover occurs when the histogram bars move from below the zero line to above it, signaling a shift toward upward momentum. In many cases, this crossover point aligns with the beginning of a fresh price run on your main chart. To find an entry within an already active trend, we look for the saucer signal. This setup identifies the end of a quick pullback. For a bullish saucer, look for 2 consecutive red bars, where the second is lower than the first, followed immediately by a green bar. This sequence is only valid for a buy signal if it occurs entirely above the zero line. Crossovers help you catch the start of a trend, while saucers allow you to enter a move that is already in progress. Some moves look strong on the price chart, but are actually losing energy. We identify this using the Twin Peaks strategy. Find a market bottom and draw a downward line connecting 2 recent price lows. Now connect the lows on the histogram below the zero line. Notice that while price drops, histogram lows rise. This contradiction is divergence, showing price and momentum no longer agree. This divergence indicates that selling pressure is thinning out, which often precedes a shift back toward the buyers. While the Awesome Oscillator is effective, it has a limitation. It measures momentum, but cannot see the overall market structure. In this scenario, we see a clear buy signal from the oscillator, but the price is simultaneously hitting a major resistance level. Contrast that with a signal that has plenty of room to move before hitting any historical price barriers. Professional traders use the oscillator as a confirmation tool. They only take the trade if it aligns with other indicators like the RSI and established price levels. Momentum signals carry significantly more weight when they occur in alignment with the broader market structure. Take a look at your own trading workspace. You've now mapped out the crossover, the saucer, and the Twin Peaks. Now for a practical challenge. Spend the next 20 minutes in your demo account finding 2 historical examples of each of these 3 setups. Mastering these patterns requires training your eye through active charting rather than passive observation. You now have a framework to stop guessing and start trading in harmony with the market.